kinds of different influences. So our next guest is saying that selling has subsided right now in crude as geopolitical risks increase. And he's here to tell us how he's navigating that energy space. So joining us now is Phil Streible, the chief market strategist over at Blue Line Futures. Phil, thanks so much for being with us. Now, one of the big reasons why we're talking about crude is the price movements that we are seeing. It's also because we got a lot of fundamental news or a view from oil majors like ExxonMobil and Chevron as well. So take us through why you think crude oil is due for this pop, at least near to medium term.
Yeah, I mean, earlier in the week after gapping lower, it seemed like that geopolitical uncertainty and risk premium was removed and traders could get back to the basics on what's driving energy prices. We saw futures bottom on Tuesday on improving fundamentals. The Department of Energy, they added 3 million barrels to the SPR. Oil inventory showed an unexpected decline of 510,000 barrels, and we've been monitoring China's recovery. Remember, China is the #2 consumer of crude oil. We've seen some upside surprises in their manufacturing data and starting to show that the stimulus measures they're taking is gaining traction. So, there's expectations that we could see additional stimulus out of China after the U.S. election. And then finally, OPEC, their production could be delayed. So then you get this geopolitical situation in the Middle East, and now we're back at where we're having $2.50 ranges on crude oil. But realistically, if you back up, we think once you get the uncertainty out of the election away, you get the Chinese stimulus starting to take shape, the U.S. and the Eurozone start to cut rates, and then you get the participation by money managers coming back in. That's where you get the mid-$70 crude.
All right, so if that's the case, do you just straight up play the oil futures market with it? Do you play energy-related stocks? Do you use ETFs that track certain stocks in the industry? How exactly do you do that?
Yeah, I mean, if you do look at Exxon, they are one of the best performers, one of the best majors this year. We own that name in our wealth management for our clients in our concentrated portfolio. That's where we have 10 names, no more than 10% allocation in any one name, and no more than 50% allocated to cash. But the trade that we believe is that buying the January micro crude contract, it keeps you in the game until mid-December. We like the micro crude because every $1 move is a $100 move in a client's account. We're recommending to buy the January at $66 with a stop at 63. We're targeting $75. So essentially the risk is $300. The reward is $900.
All right, so there's the play using micro crude futures. Phil Streible, thank you very much, sir. Have a nice weekend.
You too.
All right, so Tyler, with the crude